Hello guys and welcome back to the channel. So Tesla has had an amazing earnings call but reported very bad numbers, and a lot of you wanted to get in after the crash that was supposed to happen. We were promised a crash after the earnings call and it never happened. So it's been 2 days after the earnings call now, 2 trading days, and I have some thoughts what we should do with Tesla. And the main question is this the next Rocket Lab or the next Palantir, or is it going to be dead money? Are we going lower? So these are the questions that I want to answer, and it's going to be a little bit of a surprise coming from a Tesla bull like me. So please make sure that you subscribe, say hi to me in the comments, and yeah, let's get to the video. So let me see my notes here. So first of all, I want to show you the things in the earnings that I think was super bad. So you can see that almost all the numbers that Tesla has is trending down. You can see that the revenue or the automotive revenue in Q1 2023 was 19 million. So that was exactly 1 year ago. Now we're at 17 million. You can see the gap gross margin just trending down, getting worse. You can see the operating margin going from 11, 9.6, 7, like it's just going in the wrong direction. So every number is basically going in the wrong direction. You can see inventory here, 15, 16 days of inventory, 15, and then 28 days in this quarter. They do have a story about this, so it remains to see if this is going to be the same after next quarter. But definitely the numbers are not good. Yet the stock market is up super much. So how can this be? So one of the things that they have announced is that they are changing the future lineup. This is very interesting. So we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. These new vehicles, including more affordable models, we will utilize aspects of the next generation platform as well as aspects of our current platforms, and we will be able to be produced on the same manufacturing lines as our current vehicle lineup. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than a 50% growth over the 2023 production before investing in new manufacturing lines. So this is very bullish at the same time and very bearish at the same time. So I'm going to go into this. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. So basically, I think that for the first time in Musk's life, he is not going all out on expansion, and he is in capital preservation mode. And he is leaning down the organization, just fired 10% of the people. And he found that it's really ingenious what he's doing. He's saying, okay, instead of spending billions of dollars on building new factories, can we make our own current factories more productive? And what can we do really fast to achieve this? And I guess his team came up with that, look, we already know what the next gen production revolution is going to be, and we could use parts of the current lineup and make a cheaper model. And that way we don't have to build new factories. We can scale up the current factories, and that is amazing. But this brings a new problem. And the new problem is that basically Tesla is going all in on self-driving and robotaxis. And both of these, so basically your total addressable market for full self-driving is the cars that you have produced. So if you're not going balls to the wall on building new factories and, going down to the super cheap model and, flooding the market with cars, your TAM of who can buy FSD is much smaller, and it's exponentially smaller. So it's not just that the plan was that they would get to 20 million cars by the end of 2030. This is impossible at this point because they don't have the new gigafactories. They're not built yet, and they're not even building them until they scaled up the production in the existing factories with this new technique to 3 million. And again, he didn't say they're going to scale to 3 million in 2024. He said that the production of these new vehicles starts in 2025. They need to be ramped up. So maybe in 2026 they will reach 3 million. And the difference of, growing, because what you want for Tesla is vehicles on the road. And if you go from 3 million to then 5 million a year, to then 7 million a year, to then 12 million a year, your vehicles on the road is growing super fast. But if you go from 3 million to 3.5 to 4 million to 4.5, your vehicles, your TAM of who can take up FSD is much less. Like it's growing much slower. Sorry, it's a bit late. That's why I'm mixing the words. And you could say, but Vince, you're wrong. They can license FSD and they can make money on FSD from all the other OEMs. And you would be correct on that, except they specifically said on the earnings call that they are in talks with an OEM, which I believe is Ford. I'm just going to say it. I believe all signs point to that's Ford, okay? And they said they're probably going to sign a contract this year, but it would take them 3 more years before they start producing those cars. Then those OEMs are not all in on electric cars. Maybe they're going to put in, I'm actually curious if they're going to put in the autonomous driving or FSD into non-electric cars. That would be pretty crazy. But the point is that let's say it's Ford and Ford is producing 2 million cars per year. It's not going in all the cars. And Ford is not a company that is expanding production very, very rapidly. So this brings me to this point of what's happening with Tesla, because clearly there has been a pivot. That's actually also why I sold my shares, which I got a lot of hate for, because my thesis on Tesla was that they're going to scale the auto manufacturing to 10 million cars. I was a bit more pessimistic than the 20 million. I said 10 million cars by 2030 per year. And with that growth, you're getting Tesla as a car company at a fair price. And then you get FSD basically for free. There is no bot in the price, and nothing, like all of these are just call options, and you're getting a very, very good deal. And then I listened to the earnings call. I believe it was the Q3 earnings call in 2023. And I saw that my thesis was wrong, and they cannot scale the cars as fast as they're scaling. And when your thesis is wrong, I sold, because I'm like, okay, then I don't know, like I was wrong about it, so I had to sell. And it turned out to be the correct move. But since I sold, there has been a lot of things that have happened in Tesla's favor. All the new companies or all the OEMs started adapting the supercharger network. Then all the OEMs started pulling back on their electric car plans, which is super bullish for Tesla, because this bad economy, bad interest rate environment is going to turn at one point. And then you need to have factories, because you can't scale car production is one of those things. It's not like the iPhones that you see that customer demand is increasing, so we just produce more iPhones. You have to actually plan years and years ahead, get permits for the factories. You have to build the factories. You have to scale the factories. And because these companies have all pulled back on the spend, when the times turn and people are ready to buy EVs again, Tesla has full of factories that can just pump up the cars. And so that has changed. V12 of FSD came out. That has changed since I sold. And yeah, there's a lot more things that are super bullish for the stock. So I actually took a very hard look at is it time to buy back Tesla stock, and what can we expect? So one thing that I want to say is it's impossible to time the market. So the last earnings call was actually the perfect example why you cannot time the market. So I even tweeted that the markets have a way of trying to F with you. And everybody before the Tesla earnings call was thinking that Tesla is going to crash and they want to buy after the crash. And I wrote in this tweet that normally if everybody agrees on something, it doesn't happen. And what's the two ways that Tesla could F with you? One of them is that the bottom was just before the earnings call. And number two is that we go lower on the earnings call and then everybody buys and then we just keep on dipping. Clearly, it became alternative one and we are up from here. The question is, what can we expect? So I have this Tesla model, and this is also the model that you can get if you become a channel member or you become a Patreon member. The links are in the description box below. If you become Patreon or a channel member, you get exactly the same thing, which is pretty much nothing. You're just supporting the channel. You get access to me and you get my valuation models. And the last month we had 3 people join and I believe 1 patron, and thank you guys so much. You make my day every day when I see that someone joins. So sorry for this long shameless plug. So the point is that I updated this model now. Actually, I didn't have to update a lot on it because it was mostly correct. And this is my Tesla projections. I don't want to go into a super detail. Again, if you download it, you can see it. But this is the units that they're producing. So I'm saying that in 2024, they're going to make 2 million cars, and then 2025, 2.8 million. This is maybe over pessimistic because Musk said that to reach 3 million, they need the new models, and they would come like in the second half of 2025, and there is such a thing as Musk time. By the way, I'm not so sure. I heard a lot of people being pessimistic on if these new vehicles would really come in the second half of Q2. I want to say the one thing that Musk has been even ahead of schedule is the Model Y ramp. And that's because it was using 75% of the parts of Model 3. So if they come out with a new model that is basically using a lot of parts and a lot of processes from their already existing 3 and Y lines that they know how to do in and out, it might be that they will be ahead of schedule or at least on time with this. So in this version, in 2030, they will scale up to 15 million cars produced. Again, this is probably too optimistic on the cars. It will be quite surprising what price I get on this model. And so this shows you the fleet that is on the road. So this is basically the TAM that can get FSD. Because it seems like, we have a car company and we are going all in on FSD, and that's what is going to make the profit. So you see that it's a substantial risk on Tesla if they're producing less cars, and this number is just 4 million, this number is 5 million, then the TAM that can take up FSD is radically less. I'm calculating with a 12% profit margin on this. I don't want to so much go into the numbers. I just want to give you the logic. So this part of Tesla, I put a 30 PE. And in 2030, with these numbers, it's going to be worth $800 billion. We are currently around 400 billion. But this is just the car company, nothing with the FSD. So I wanted to leave it like this because they did reduce the price to $99 a month. I put a take rate of 30% and 199. So the reason why I didn't change it is probably if the price is reduced to 99, then the take rate will be 60%, but the money that you get from it is probably the same. Now I calculated with an 80% extra profit because you need to buy those NVIDIA chips and you are continuously working with the full self-driving, and I got to $55 billion of pure profit. If you put a 30 multiple on that, let me see. So basically if you add these two together, let me see if I calculate it correctly. Sorry, I had to just, it was some time ago when I made this table. So the point is, this is the profit that the car part of the company and FSD make together. So that's 55 billion. If you add a 30 multiple on that, then in 2030, we have a $1.6 trillion valuation. And these are the current shares outstanding today. If you're calculating with a 3% increase per year dilution, then basically you will get a $429 stock price in 2030, which is not a lot. And I again want to show you that this is very optimistic numbers on scaling up the car production, because let's say that they don't build the gigafactories only in 2026, then it's impossible to go to this 5.4 million. And what I'm not calculating here is robotaxi, because I honestly tell you, I have no effing clue how to calculate that. And most probably it's something that will have to be scaled up, and I think it will mean a lot more after 2030. Now, I like to go for a 20% return per year. And if the stock price is going to be fair valued at 429 in 2030, then, and I want the 20% return, then today the fair price for the stock should be, I will just update that because it's 6 years left, $144. Now, because Tesla is a company that I think is a very, very short, like I'm very, very sure that it's going to be worth more if you buy it today, I'm willing to take a lower profit. The current price, which is 170, it suggests a 15%, a little bit, let's say 17%, something like 17% CAGR up to 2030, which is pretty good, but it's not mind-blowing. Like, remember that you're taking a risk with this, and my big problem is that I feel that there's a subset of Tesla investors that think that Tesla is going to moon like it did in 2019. And that is just not the case. I think that from now on, Tesla is a very big company. And what you should expect is a 20% return per year. And hey, what's wrong with that? I'm very happy if we get 20% per year. If we get 15% per year up to 2030, I'm not going to cry. I will still be happy with that. But this is what you have to know buying Tesla. Now, in the question, have we bottomed yet? I don't know. All I can tell you that if you learned anything from this earnings call is that it's impossible to time the bottom. And if you wanted to buy below 140, you literally had, not even on this day, on this day, it went to 138. I think you had minutes to buy. And if you wanted to buy below 160, you had 5 days to buy below 160. So it's definitely a stock that doesn't wait around for you. And my suggestion is, if you like the price and you want to be a long-term investor in Tesla, just go ahead and buy. Don't wait for the dip, because we don't know if we're going to get a dip. And for the question, if I am buying Tesla, the thing is that I am very cash poor right now. I'm 100% invested into stocks, mainly Rocket Lab. And I always joke about OnlyFans. I haven't opened an OnlyFans yet, and I don't know how successful it would be. But I am trying to get money. So if I can pool together money, I can send it to the account, and Tesla is still within my buy range, I'm definitely a buyer. If I had money out today, I would have bought. I actually would have probably bought a few days before earnings or the day after earnings. So anyways, but this was my thoughts about Tesla. I don't think it's as good of an opportunity as people make it out to be, but it is nevertheless a very sure and still a very good opportunity, but it's not going to moon as it did in 2019. So thank you so much. Please make sure that you're subscribed. Let me know if this video helped you out or not. And I'll see you in the next video, which is probably going to be about Rocket Lab. We go back to the normal scheduling now. Ciao, guys.